There's a cycle that every trader knows. You lose a trade and immediately your mind goes to the same place. Not to your behavior, not to your execution, but to your knowledge. You think, I didn't see that coming. I need to learn more. I need a better indicator. I need a more advanced strategy. So you go searching. Another YouTube video, another course, another book, another guru promising the secret pattern that the institutions don't want you to know. You consume it all. You add another indicator to your chart. You learn about order blocks or market structure or liquidity sweeps or whatever the newest trend in trading education is selling. And for a moment you feel empowered. You feel like you're getting closer, like you're filling in the gaps, like the next trade will be different because now you know more. But then you trade again, and you lose again, not because the analysis was wrong, but because when the moment came, when the trade was live and your money was at risk, you froze, or you panicked, or you exited early, or you moved your stop, or you sized up too big because you were trying to make back yesterday's loss. The technical analysis was fine. The setup was valid. The chart said one thing, but your emotions said another. And your emotions won. Again. And so the cycle repeats. You blame the strategy. You think you need to learn more. And you go searching again. And again. And again. This is the technical analysis trap. The belief that if you just acquire enough knowledge, if you just find the right system, everything will click into place. You'll finally be consistent. You'll finally be profitable. You'll finally be free. But here's the truth that no one wants to hear. You already know enough. Let me say that again because it's the most important sentence in this entire video. You already know enough to be a profitable trader. You don't need another indicator. You don't need to learn Elliott Wave or Wyckoff or smart money concepts. You don't need a $5,000 course from someone who trades on a demo account. You don't need more knowledge. What you need is better behavior. Think about it. Do you really not know where support and resistance are? Do you really not understand that you should cut your losses and let your winners run? Do you really not know that risking 10% of your account on one trade is reckless? You know these things. Every trader knows these things. The problem isn't what you know. The problem is what you do. You know you shouldn't revenge trade, but you do it anyway. You know you shouldn't move your stop loss, but when price gets close, you give it a little more room. You know you should wait for confirmation, but when you see price moving without you, you jump in out of FOMO. You know you should stick to your plan, but in the moment, your plan feels like a suggestion, not a rule. This is not a knowledge problem. This is a behavior problem. And until you recognize that, you will stay stuck in the cycle, searching for the next strategy, blaming the last one, never realizing that the system isn't broken. You are. Let me be clear. I'm not saying technical analysis doesn't matter. It does. You need a framework. You need to understand market structure, price action, risk management. But here's the thing. Technical analysis is a commodity. Everyone has access to the same charts. Everyone can learn support and resistance. Everyone can watch the same YouTube videos. Technical knowledge is abundant. Behavioral discipline is rare. And in a world where everyone has access to the same information, the edge doesn't come from knowing more. It comes from executing better. It comes from being able to follow your rules when your emotions are screaming at you to break them. It comes from consistency, not complexity. The traders who win are not the ones with the most advanced strategies. They're the ones who can execute a simple strategy without interfering. They're the ones who can take a loss without spiraling. They're the ones who can sit on their hands when there's no setup instead of forcing a trade out of boredom. That's the edge. Not what you know, but how you behave. So if you've been trading for months or years and you're still not where you want to be, I want you to ask yourself an honest question. Is it really because you don't know enough? Or is it because you can't execute what you already know? If you're honest, you know the answer. And if you're ready to stop chasing knowledge and start building behavior, then this video is for you. Because what I'm about to show you is why good behavior beats technical analysis every single time. And more importantly, how to build that behavior so that the knowledge you already have can finally translate into the results you've been chasing. Let's begin. Imagine a medical student. Brilliant. top of their class. They've spent years in lecture halls memorizing every bone, every organ, every vein in the human body. They've read every textbook. They've aced every written exam. They can recite surgical procedures step by step without hesitation. On paper, they are ready to operate. And then comes their first day in the operating room. The patient is on the table. The anesthesia is administered. The scalpel is placed in their hand. And for the first time, they are not reading about surgery. They are performing it. Real blood, real consequences, real pressure. And something happens. Something they didn't prepare for in all those years of study. Their hands start to shake. Their mind, so clear in the classroom, goes blank. The knowledge is still there, buried somewhere, but it's unreachable. Because in this moment, they are not being tested on what they know. They are being tested on what they can do under pressure. And those are two completely different things. All that knowledge, all those years of study, becomes useless if they can't execute when it matters. The patient doesn't care how many textbooks they've read. The patient cares whether the surgeon can keep their hands steady and do the work. This is the surgeon's paradox. Knowing what to do is not the same as being able to do it when the stakes are real. And this is your paradox as a trader. You can analyze a chart perfectly when there's no money on the line. You can backtest a strategy and see every winning trade in hindsight. You can paper trade and execute flawlessly because it's not real. You can review your past trades and say with absolute clarity, I should have held there, or I should have cut that loss earlier. But when you're live, when your real money is in the market, when the candles are moving and your account balance is fluctuating, everything changes. The knowledge is still there. You still know what the plan says. You still know where your stop is, where your target is, what the rules are. But in that moment, your hands shake. Not literally, maybe, but emotionally, psychologically. You hover over the close button. You refresh your platform. You second-guess the entry. You imagine all the ways it could go wrong. And before you even realize what you're doing, you've exited the trade early, or moved your stop, or broken your rule, or done something that your back-tested, logical, calm self would never do. Why? Because execution under pressure is a different skill than knowledge in comfort. Let me give you a framework to understand this. There are two types of competence in trading. The first is technical competence. This is your ability to read a chart, identify patterns, understand market structure, calculate risk. This is knowledge, and it's important. You need it. The second is behavioral competence. This is your ability to execute your technical knowledge without interference from your emotions. This is discipline. And this is what separates profitable traders from everyone else. You can have high technical competence and low behavioral competence, and you will lose. You can have average technical competence and high behavioral competence, and you will win. Let me prove it to you. Imagine two traders. Trader A has spent 5 years studying technical analysis. They know every pattern. They can read market structure like a book. They understand institutional order flow. On a demo account, they're a genius. But when they trade live, they can't follow their rules. They exit early. They revenge trade. They oversize. Their technical brilliance is rendered useless by their behavioral chaos. Trader B has a simple strategy. Support and resistance. Risk 1% per trade. Cut losses at structure breaks. Let winners run to the next level. That's it. Nothing fancy. But Trader B follows this plan with absolute consistency. Every single trade. No exceptions. No deviations. No emotional overrides. Who do you think is profitable after 1 year? It's not even close. Trader B wins. Every time. Because the market doesn't reward you for what you know. It rewards you for what you do. And what you do is a function of your behavior, not your knowledge. Here's the painful truth. Most traders are not losing because they don't understand technical analysis. They're losing because they can't execute. They know what to do. They just can't do it. They know they should wait for confirmation, but FOMO makes them jump in early. They know they should cut losses quickly, but hope makes them hold losing trades. They know they should let winners run, but fear makes them close at the first sign of profit. The knowledge is there. The behavior isn't. And this is why you can spend years learning more and more technical analysis and still not make progress. Because you're trying to solve a behavior problem with a knowledge solution. It doesn't work. Think about how much time you spend looking for the next strategy versus how much time you spend building behavioral discipline. If you're like most traders, it's 90% strategy hunting and 10% behavior building. And that ratio is exactly backwards. The professionals do the opposite. They spend 10% of their time refining their technical edge and 90% of their time managing their psychology, their discipline, their execution. Because they understand that once you have a reasonable technical framework, the entire game becomes behavioral. Can you follow your rules when you're afraid? Can you sit on your hands when there's no setup? Can you take the loss without revenge trading? Can you let the winner run even when it pulls back? These are not technical questions. These are behavioral questions. And your answers to these questions determine your results more than any indicator ever will. So here's the shift you need to make. Stop asking, what's the best technical strategy? Start asking, can I execute my current strategy without interfering? Because I promise you, the answer to the second question matters far more than the answer to the first. The surgeon who can operate under pressure with basic knowledge will save more lives than the brilliant surgeon who panics in the OR. And the trader who can execute a simple strategy with flawless discipline will make more money than the genius who can't control their emotions. That's the surgeon's paradox. And that's your reality. There are two ways to approach trading. And the one you choose will determine whether you succeed or stay stuck. The first way is to treat every trade like a unique work of art. Every chart is different. Every setup requires deep interpretation. You analyze the context, the sentiment, the higher time frames, the lower time frames. You read between the lines. You adjust. You flex. You use your intuition. You make it personal. This is the artist's approach. And it feels intelligent. It feels like you're really engaging with the market. Like you're using your experience and your skill to navigate the complexity. But here's the problem. It's exhausting. And it's inconsistent. When every trade is unique, every decision is subjective. And when every decision is subjective, you can justify anything. You can talk yourself into trades that don't meet your criteria. You can talk yourself out of trades that do. You can make the chart say whatever your emotions want it to say. You can't build an edge on subjectivity. Because subjectivity is just emotion wearing a disguise. Now let me show you the second way. The way professionals trade. They treat trading like an assembly line. Not in a robotic, mindless way, but in a consistent, repeatable, process-driven way. Every trade goes through the same quality control checklist. Is the setup valid? Yes or no? Is the risk defined? Yes or no? Does this meet my criteria? Yes or no? If yes, execute. If no, walk away. There's no interpretation. There's no maybe. There's no, this one feels different. It's binary. It either passes the filter or it doesn't. And once the trade is live, the same process applies. Did price hit my stop? Yes or no? Did it hit my target? Yes or no? If neither, do nothing. This is the assembly line. It's boring. It's mechanical. And it works. Because consistency compounds. Let me explain what I mean. In technical analysis, learning compounds slowly. You learn a new pattern and maybe it gives you 1 or 2 more setups per month. You learn a new concept and maybe it improves your win rate by 2%. The gains are incremental and they take time. But in behavior, consistency compounds daily. Every time you follow your rules, you make it easier to follow them the next time. Every time you resist the urge to revenge trade, you weaken that urge. Every time you let a winner run, you train your brain to trust the process. Behavioral discipline is like a muscle. The more you use it, the stronger it gets. And the stronger it gets, the easier trading becomes. But here's the key. You can only build that muscle through repetition. And you can only get clean repetition when your process is consistent. If every trade is a unique artistic interpretation, you're not building repetition. You're just improvising. And improvisation doesn't build skill. It builds confusion. Think about it this way. Imagine you're learning to shoot free throws in basketball. If every time you step up to the line you use a different technique, a different stance, a different release point, you will never get good. Because you're not building muscle memory. You're just experimenting. But if you use the exact same technique every single time, your body learns. It internalizes. And eventually the shot becomes automatic. Trading is no different. If you use the same entry criteria, the same risk management, the same exit rules every single time, your brain learns. It internalizes. And eventually the execution becomes automatic. You stop second-guessing. You stop overthinking. You just execute. That's the power of the assembly line. It turns decision-making into process following. And process following is way easier than decision-making. Let me give you a practical example. Let's say you trade breakouts. Your rule is simple. When price breaks structure with a strong close, you enter on the retest. Stop goes below the structure. Target is twice the risk. Now imagine you follow this rule exactly 100 times. No deviations. No, I'll skip this one because it's Friday. No, I'll take profit early because I'm up this week. Just pure, mechanical execution. What happens? Two things. First, you get data. Real data. You can now say with confidence, this approach wins 45% of the time with a 1 to 2 risk reward. That's profitable. You're not guessing anymore. You're measuring. Second, you build discipline. By trade 100, following the rule isn't hard anymore. It's just what you do. You've turned behavior into identity. But now imagine the opposite. Imagine you take the same 100 trades, but you deviate constantly. Sometimes you enter early. Sometimes you move your stop. Sometimes you take profit at 1R instead of 2R. Sometimes you skip valid setups because you're scared. What happens? You get noise. You have no idea if the strategy works because you never actually traded the strategy. You just traded your emotions wearing the strategy's name tag. And you build nothing. No data. No discipline. Just confusion and frustration. This is why amateurs stay stuck. They never commit to a process long enough to let it work. They're always tweaking, always adjusting, always looking for the next thing. They never build the muscle because they never do the reps. Professionals, on the other hand, understand that the edge is not in the strategy itself. The edge is in the ability to execute the strategy consistently. So they pick something reasonable and they run it into the ground. 100 trades. 200 trades. They don't judge it on trade 10. They judge it on trade 200. And by trade 200, they're not the same trader they were at trade 1. Not because they learned some secret, but because they built behavioral strength through repetition. Here's the shift you need to make. Stop treating every trade like it's special. Stop interpreting. Stop adjusting. Start systematizing. Write down your rules. Make them binary. Yes or no. If yes, trade. If no, don't. And then follow those rules no matter what for the next 50 trades. Don't judge the results yet. Just build the repetition. Build the muscle. Build the habit of doing what you said you'd do. Because that habit, that boring, mechanical, unglamorous habit, is what separates the top 5% from everyone else. The assembly line beats the artist. Every single time. Let me tell you about the leaking bucket. Imagine you have the best water source in the world. Crystal clear. Endless supply. This is your technical analysis. You know how to find good setups. You know where to enter, where to exit, how to manage risk. The source is solid. Every day you fill your bucket. You take good trades. You execute your edge. You pour water into the bucket. And at the end of the day, you expect the bucket to be full. But it never is. You look down and the bucket is empty, or barely filled. And you don't understand why. You had good trades. You poured water in. Where did it go? And then you look closer. And you see them. The holes. Small holes. Barely visible. But every drop you pour in leaks right back out. This is what bad behavior does to good analysis. It doesn't matter how good your technical edge is if your behavioral leaks drain it all away. Let me show you the most common leaks. The ones that are quietly destroying your account while you blame your strategy. Leak number 1. Revenge trading. You take a loss. It's a valid loss. The setup didn't work. It happens. Your plan says move on. But your ego says, I need to make that back. Now. So you immediately look for another trade. You don't wait for your criteria. You don't check your rules. You just need to get back to even. You enter. You lose again. Now you're down 2 trades. And the hole just got bigger. 1 perfect trade, 1 revenge trade. Net result? The revenge trade just erased the good one. The bucket is leaking. Leak number 2. Emotional position sizing. Your plan says risk 1% per trade. That's the system. That's the math. But this setup looks really good. You feel confident. So you risk 2%, maybe 3%, maybe 5% because you really need a win. The trade loses. And instead of a 1% loss, you just took a 5% hit. That one oversized loss just erased 5 perfect trades. 5. The bucket is leaking. Leak number 3. Moving your stop loss. You set your stop based on market structure. It's logical. It's planned. But price gets close and you panic. Maybe I set it too tight. Maybe I should give it more room. So you move it. You widen it. Price hits the new stop. Now instead of a 50 pip loss, you took a 100 pip loss. The bucket is leaking. Leak number 4. Cutting winners early. We covered this in the last video, but it bears repeating. You plan for a 3-to-1 trade. Your analysis is right. Price is moving toward your target. But fear creeps in. You see profit and you think, what if it reverses? So you close at 0.5-to-1. You just turned a winning trade into a mediocre trade. And when your winner doesn't win enough to cover your losers, your edge disappears. The bucket is leaking. Leak number 5. Trading outside your plan. You have rules. Clear rules. But you see a setup that doesn't quite fit. And you think, close enough. So you take it. You rationalize. You justify. This is still within the spirit of my strategy. But it's not. It's a deviation. And deviations add noise. And noise kills edge. The bucket is leaking. Now let me show you the math of erosion. Let's say your technical analysis gives you a legitimate edge. 55% win rate. 1-to-2 risk-reward ratio. On paper, over 100 trades, this system is profitable. But now let's add the leaks. Let's say 20% of your trades are revenge trades. These trades don't have your full edge because you took them emotionally, not systematically. Your win rate on these drops to 40%. Let's say 15% of your trades are oversized. When these lose, they hurt twice as much as they should. Let's say 30% of your winners are cut early. Instead of 2R, you took 0.7R. Now run the math again. The system that should be profitable is now a losing system. Not because the technical analysis failed, but because your behavior sabotaged it. You look at your results and you think, this strategy doesn't work. But the strategy was never the problem. The leaks were. And here's the brutal part. You don't need all 5 leaks to sink. 1 leak is enough. If you do everything else perfectly but you revenge trade, that one behavior can erase your edge. If you do everything else perfectly but you oversize when you're emotional, that one behavior can blow your account. 1 act of bad behavior can erase 10 acts of good analysis. Think about that. You can have 10 perfect trades, executed flawlessly, following your plan. And then 1 revenge trade, 1 oversized loss, 1 moment of emotional interference, wipes it all out. That's the erosion effect. It's not dramatic. It's not a single catastrophic blow. It's slow. It's quiet. There's 1,000 small leaks that drain you before you even realize what's happening. So how do you fix it? First, you identify the leak. Not all of them, just the biggest one. The behavior that's costing you the most. Is it revenge trading? Is it position sizing? Is it moving stops? Be honest. Look at your last 50 trades and find the pattern. What behavior shows up again and again? Second, you plug that leak. Not by trying harder, not by relying on willpower, but by designing it out of your process. If you revenge trade, implement a rule. After a loss, wait 30 minutes before looking for another trade. If you oversize emotionally, automate your position sizing. Use a calculator. Remove the decision from your hands. If you move stops, set them and then close the platform. Don't watch. Don't give yourself the opportunity to interfere. You can't fix bad behavior with good intentions. You fix it with better systems. And here's the beautiful part. When you plug just one major leak, your results transform. Not because you learned more, but because you stopped sabotaging yourself. The water was always good. The source was always there. You just needed to fix the bucket. So stop searching for a better water source. Stop blaming your technical analysis. And start looking for the holes. Because I guarantee you they're there. And they're costing you everything. I want you to imagine something. Imagine you take your exact trading strategy, every rule, every criterion, every entry and exit condition, and you code it into an algorithm. A trading bot. This bot has no experience. It has no intuition. It can't read between the lines or feel the market. It only knows the rules you gave it. If A happens, do B. If C happens, do D. That's it. The bot doesn't get scared. It doesn't get greedy. It doesn't get bored. It doesn't revenge trade. It doesn't second guess. It just executes. Now imagine you run a test. You and the bot trade the same strategy for 1,000 trades. Same market. Same time frame. Same rules. You, the human, have years of experience. You understand context. You can adjust to market conditions. You can interpret subtle signals. You can use your judgment. The bot has none of that. It's just a dumb machine following instructions. Here's the question. After 1,000 trades, who do you think performs better? If you're honest with yourself, the answer is uncomfortable. The bot probably wins. Why? Because the bot has something you don't. Perfect behavioral consistency. Let me show you what I mean. The bot sees a valid setup. Takes the trade. No hesitation. No fear. No. Maybe I should wait for more confirmation. It just executes. You see a valid setup. But you hesitate. You think, the last 3 trades lost. Maybe I should skip this one. Or it's late in the day. Maybe I should wait. Or, this looks a little different than usual. You talk yourself out of it. The trade goes on to hit target. The bot made money. You didn't. Or consider this. The bot enters a trade. Price pulls back close to the stop, but doesn't hit it. The bot does nothing. It's programmed to wait. The trade eventually moves to target. The bot wins. You enter the same trade. Price pulls back. You panic. You think, this is going to stop me out. I should just close now and save the extra loss. You close early. The trade then moves to target without you. The bot won. You lost. Same trade. Or this. The bot takes a loss. It records the data and immediately scans for the next valid setup. No emotion. No revenge. Just process. You take a loss. You feel frustrated. You feel like you need to make it back. You start forcing trades. You take a setup that doesn't quite fit your rules. You lose again. The bot is neutral. You're in a hole. Do you see the pattern? Your technical knowledge, your experience, your ability to interpret context, all of it becomes a liability when it gives you permission to override the plan. The bot doesn't override. Can't. And that's precisely why it wins. This is the algorithmic test. And it reveals something uncomfortable. In most cases, your discretion is not helping you. It's hurting you. You think you're being smart when you skip a valid setup because it doesn't feel right. But what you're really doing is letting fear make your decisions. You think you're being prudent when you exit early to protect profit. But what you're really doing is letting anxiety control your execution. You think you're being adaptive when you deviate from your plan. But what you're really doing is introducing noise. The bot doesn't have these problems. It doesn't feel. It doesn't second guess. It doesn't deviate. It just follows the rules. And over time, the rules work. Now, I'm not saying you should remove all discretion. I'm not saying you should become a mindless robot. But I am saying this: if you can't outperform a simple algorithm running your own rules, then your discretion is the problem, not the solution. And for most traders, that's the reality. Here's why. There are 3 stages of trader development. Stage 1, the beginner. The beginner follows rules because they don't know any better. They don't have the experience to deviate. Sometimes they do surprisingly well. Not because they're skilled, but because they're consistent. Stage 2. The intermediate. The intermediate has learned enough to be dangerous. They think they can outsmart the plan. They start using discretion. They skip setups, they adjust stops, they override the rules because they know better. This is where most traders get stuck. Because their discretion, driven by emotion disguised as experience, destroys their edge. Stage 3. The advanced. The advanced trader has learned that the plan is smarter than their feelings. They return to consistency. They follow the rules like the beginner, but now they understand why. They've closed the loop. And this is when they start winning consistently. The irony is that the beginner and the advanced trader behave almost identically. They both follow the plan. The only difference is that the advanced trader tried to be clever, failed, and learned the lesson. Most traders never make it to stage 3. They stay stuck in stage 2, forever thinking they're too smart to follow simple rules. Don't be that trader. Here's the shift. Stop asking, "What should I do in this situation?" Start asking, "What do my rules say to do in this situation?" If your rules say take the trade, take it. Even if you're scared. Even if the last 3 lost. Even if it's Friday afternoon. If your rules say hold to target, hold. Even if it's pulling back. Even if you're up profit. Even if your brain is screaming at you to close. Trade like the algorithm. Not because you're a robot, but because the algorithm doesn't lie to itself. The algorithm doesn't mistake fear for prudence. It doesn't mistake greed for confidence. It doesn't mistake boredom for opportunity. It just executes. And if you can learn to do the same, you'll discover something profound. The rules work. They always did. You were just in the way. There's a principle in business that separates great companies from mediocre ones. Hire for character, train for skill. The logic is simple. Skills can be taught. You can train someone to use software, to follow a process, to execute a task. That's learnable. But character? Character is who someone is when no one is watching. When pressure hits. When things go wrong. You can't train that in a few weeks. Character is built over years. And great companies know that a person with strong character and weak skills will outperform a person with strong skills and weak character. Because you can fix skills. You can't fix character. The same principle applies to trading. Technical analysis is a skill. You can learn it. Support and resistance, trend lines, candlestick patterns, risk-reward ratios. Give someone 6 months of focused study and they'll understand it. It's teachable. But behavioral discipline? That's character. And you can't learn character from a YouTube video. Behavioral discipline is your ability to do the right thing when everything inside you wants to do the wrong thing. It's your ability to take a loss without your ego shattering. It's your ability to sit with uncertainty without forcing action. It's your ability to win without becoming reckless. It's your ability to stay calm when everyone else is panicking. That's not a skill. That's who you are. And the market doesn't care how many chart patterns you know. The market cares about your character. Can you handle being wrong without spiraling into self-doubt or revenge? Can you handle being right without letting it inflate your ego? Can you lose money and still show up the next day with the same discipline? Can you make money and not immediately increase your risk? These are character questions. And your answers determine everything. Let me break down the character traits that define winning traders. First, humility. The market is bigger than you. It doesn't care about your opinion. It doesn't care how smart you are or how much you've studied. It will humble you over and over again. And the traders who survive are the ones who accept that. They don't fight it. They don't take losses personally. They don't need to be right. They just need to follow the process. Second, patience. The ability to wait. To not force trades when there's nothing there. To sit on your hands when you're bored. To let setups come to you instead of chasing them. Patience is not passive. It's active restraint. And it's one of the rarest qualities in trading. Third, discipline. Doing what you said you'd do, especially when you don't feel like it. Following your rules when your emotions beg you to break them. Sticking to your plan when it's uncomfortable. This is the cornerstone. Without discipline, everything else falls apart. Fourth, emotional stability. Not swinging from euphoria to despair based on one trade. Staying even-keeled through wins and losses. Treating profit and loss as data, not as validation or condemnation. This is maturity, and most traders never develop it. Now here's the hard truth. You can teach someone technical analysis in 6 months. You cannot teach someone humility, patience, discipline, and emotional stability in 6 months. These things take years. They're forged through experience, through failure, through self-awareness. And this is why most traders fail. Not because they're dumb, but because they're trying to succeed in a character-testing arena with undeveloped character. They think trading is about finding the right setup. It's not. It's about becoming the right person. Think about it this way. If someone followed you around and watched only your trading behavior, not your words, not your intentions, but your actual behavior, what would they conclude about your character? Would they see discipline or impulsiveness? Would they see patience or desperation? Would they see humility or ego? Would they see emotional stability or chaos? Your behavior reveals your character, and your character determines your results. Here's the shift. Stop trying to find a better strategy. Start trying to become a better person. Work on your humility. Accept that the market owes you nothing. Work on your patience. Practice waiting even when it's boring. Work on your discipline. Follow your rules even when it's hard. Work on your emotional stability. Stop attaching your worth to your P&L. This is not soft advice. This is the core of trading. Because good behavior is not a technique. It's an identity. You don't do discipline in a moment of pressure. You either are disciplined or you're not. And if you're not, no amount of technical analysis will save you. The market is a character filter. It filters out everyone who hasn't built the internal strength to endure it. And the only way to pass through that filter is to become someone who can. Not someone who knows more. Someone who is more. Most traders spend their review time looking out the window. They analyze the market. They replay the chart. They search for what they missed. I should have seen that rejection. I didn't notice the divergence. I missed that breakout. They're looking outward. At the market. At the setups. At the opportunities. But professionals spend their review time looking in the mirror. They analyze themselves. They replay their decisions. They search for what they did. Did I follow my entry rule? Did I stick to my risk plan? Did I exit according to my system? They're looking inward. At their behavior. At their execution. At their discipline. This is the difference. The window versus the mirror. And where you look determines what you improve. If you only look at the market, you'll keep trying to get better at prediction. You'll keep searching for the perfect setup. You'll keep thinking the problem is out there. But if you look in the mirror, you'll see the truth. The problem is not the market. The problem is you. And unlike the market, you can actually fix that. Here's the framework. After every trade, stop asking, was my analysis correct? Start asking, was my behavior correct? These are two completely different questions. Your analysis can be wrong and your behavior can be right. The trade loses, but you followed your rules. That's a success. Your analysis can be right and your behavior can be wrong. The trade wins, but you broke your rules. That's a failure. You need to decouple outcome from execution. Because outcome is determined by the market. Execution is determined by you. And you only control one of those. Here's a simple behavior scorecard you can use after every single trade. Question 1. Did I wait for my full entry criteria? Or did I jump in early? Check yes or no. Question 2. Did I risk the correct percentage? Or did I oversize or undersize based on emotion? Check yes or no. Question 3. Did I exit according to my plan? Or did I interfere? Check yes or no. Question 4. Did I take this trade from a calm, clear state, or from fear, greed, boredom, or revenge? Check yes or no. For questions. For binary answers. At the end of the trade, you either have 4 yeses or you don't. If you have 4 yeses, you succeeded. The trade might have won or lost, but you executed perfectly. That's all you can control. That's a win. If you have even 1 no, you failed. The trade might have made money, but you broke the process. That's dangerous, because you just taught your brain that breaking the rules can be rewarded. And that's a slippery slope. This is the behavioral audit. And when you start measuring yourself this way, something shifts. You stop obsessing over whether you made money today. You start obsessing over whether you behaved well today. And ironically, when you focus on behavior instead of results, the results take care of themselves. Because good behavior, repeated over time, produces good results. It's math. But bad behavior, even if it occasionally produces good results, will eventually destroy you. Here's the trap most traders fall into. They have a trade that wins, but they broke their rules to get it. Maybe they oversized. Maybe they entered early. Maybe they held past their plan out of stubbornness and got lucky. The old mindset says, I made money. That's good. The new mindset says, I broke my process. That's dangerous. Because that win just reinforced bad behavior. And the next time you're in a similar situation, you'll be more likely to break the rule again. And eventually, that behavior will cost you more than the lucky win ever made you. The mirror doesn't lie. The window does. The market will show you what you want to see. But your behavior shows you who you are. So stop reviewing your charts. Start reviewing yourself. Stop asking if the trade was good. Start asking if you were good. Because at the end of the day, you are the strategy. And if the strategy is broken, no amount of technical tweaking will fix it. Let me show you two paths, two ways to approach this game. And the one you choose will determine whether you make it or not. Path 1. The amateur path. This is the path most traders take. Step 1. Find a strategy. Spend weeks or months searching for the right system. The one that wins 80% of the time. The one the pros use. The secret. Step 2. Learn technical analysis. Consume everything. Patterns, indicators, market structure, volume analysis. Become an expert. Step 3. Start trading live. And then try to control your emotions while real money is at risk. Try to stay disciplined while fear and greed pull you in opposite directions. Step 4. Fail. Blow the account or grind sideways for years. Step 5. Blame the strategy. This doesn't work. I need a better system. Step 6. Repeat. Find a new strategy. Start over. This is the cycle. And most traders die in it. Now let me show you path 2. The professional path. Step 1. Build behavioral discipline first. Before you risk real money, build the habits. Practice following rules. Practice sitting with discomfort. Practice emotional control. Step 2. Choose any reasonable strategy. It doesn't have to be perfect. It just has to have a logical edge. Support and resistance. Trend following. Breakouts. Whatever. Pick one. Step 3. Execute that strategy with flawless behavior. No deviations. No overrides. No emotional interference. Just pure, consistent execution. Step 4. Let the behavior carry the edge. Over time, the math works. Not because the strategy is magic, but because you didn't sabotage it. Step 5. Succeed. Not overnight, but inevitably. Do you see the difference? The amateur chases the perfect strategy and hopes behavior will follow. The professional builds behavior first and applies it to any strategy. The amateur thinks the strategy is the edge. The professional knows behavior is the edge. And here's the final truth. The one that changes everything if you truly hear it. Good behavior makes average analysis profitable. Bad behavior makes brilliant analysis worthless. You can have a mediocre system executed with perfect discipline and you will make money. You can have the world's best system executed with poor discipline and you will lose. The market does not reward technical brilliance. The market rewards behavioral consistency. So stop searching. Stop chasing the next indicator, the next pattern, the next guru's secret. You already know enough. You've always known enough. The question is not what you know. The question is, can you execute what you know? Can you follow your rules when you're scared? Can you take the loss without revenge? Can you let the winner run? Can you sit on your hands when there's no setup? These are the only questions that matter. And the answers are found in your behavior, not your charts. Starting today, make the shift. Stop measuring your success by your P&L. Start measuring it by your adherence to your plan. Stop judging yourself by whether you were right. Start judging yourself by whether you followed your process. Stop looking for the perfect trade. Start building the perfect execution. Because the market is not a puzzle to solve with technical analysis. The market is a mirror, and what it reflects is not your intelligence. It reflects your discipline. Master your behavior, and the results will follow. Not today, not tomorrow, but over time. Always over time. That's the path. The only path that works. The behavior-first path. And if you can walk it, you won't just become a profitable trader. You'll become a different person. Stronger, calmer, more disciplined. And that, more than any amount of money, is the real reward.